South Africa finds itself grappling with a profound economic crisis. The statistics are alarming. Unemployment has reached a staggering 32.9%, leaving millions trapped in poverty. Meanwhile, the nation's debt continues to balloon, with the debt-to-GDP ratio projected to surpass 80% this year. These two issues, unemployment and debt, are not separate challenges. They are deeply intertwined, each exacerbating the other in a dangerous downward spiral. This essay will explore the complex interplay between South Africa's unemployment and debt crises. It will examine the underlying causes, the government's response, and the impact on ordinary South Africans. Finally, it will suggest potential solutions, emphasizing the need for a multifaceted approach that addresses both the symptoms and root causes of this economic malaise. The South African economy, once a beacon of hope for the continent, is at a crossroads. The choices made today will determine whether the nation can overcome these challenges and build a more equitable and prosperous future for all its citizens. The stakes could not be higher. At the heart of South Africa's economic woes lies a devastating unemployment crisis. With over a third of the workforce unemployed, the nation faces a profound human and economic challenge. The situation is particularly dire for young people, with youth unemployment exceeding a staggering 60%. This means that a whole generation is being denied the opportunity to work, contribute to the economy, and build a better future. Several factors have contributed to this crisis. Slow economic growth in key sectors such as mining and manufacturing has led to job losses. The education system has struggled to keep pace with the demands of the modern economy, resulting in a skills gap that leaves many young people ill-equipped for the workforce. In addition, rigid labor market policies have made it difficult for businesses to hire new workers, further exacerbating the unemployment problem. The consequences of this unemployment crisis are far-reaching. For individuals and families, unemployment means lost income, poverty, and despair. It can lead to social unrest, crime, and a loss of hope for the future. For the economy as a whole, high unemployment translates into lower productivity, reduced tax revenue, and slower economic growth. It is a vicious cycle that is proving difficult to break. Compounding the unemployment crisis is South Africa's rapidly growing national debt. Years of government overspending, coupled with low economic growth, have pushed the country deeper into the red. As the debt-to-GDP ratio climbs above 80%, alarm bells are ringing, signaling a potential sovereign debt crisis. This growing debt burden is not simply a matter of numbers on a balance sheet. It has real-world consequences for every South African. As the government spends more on interest payments to service its debt, less money is available for essential public services such as education, healthcare, and infrastructure. This underinvestment in vital areas further undermines the country's long-term economic prospects. Moreover, the depreciating South African rand, fueled in part by the debt crisis, is making imports more expensive, driving up inflation, and eroding the purchasing power of ordinary citizens. This creates a vicious cycle where rising prices lead to demands for higher wages, further fueling inflation, and putting additional pressure on the government to increase spending. The situation is unsustainable and demands urgent attention. Section 4. The intertwined challenges, unemployment, and debt. South Africa's unemployment and debt crises are not isolated phenomena. They are intricately linked, each one exacerbating the other in a dangerous downward spiral. High unemployment leads to lower tax revenue, making it more difficult for the government to service its debt. This, in turn, can lead to cuts in public spending, further depressing the economy and exacerbating the unemployment crisis. Moreover, the uncertainty and lack of confidence generated by the debt crisis can discourage investment, both domestic and foreign, further hampering economic growth and job creation. This creates a climate of fear and pessimism, making it even more difficult to attract the investment needed to create jobs and stimulate the economy. To break this vicious cycle, policymakers need to adopt a holistic approach that addresses both challenges simultaneously. This will require a combination of fiscal discipline, structural reforms, and targeted investments aimed at stimulating economic growth and creating jobs. Section 5. The government's response, a balancing act. Faced with this daunting economic crisis, the South African government is walking a tightrope, trying to balance the need for fiscal discipline with the urgent imperative to address unemployment and stimulate economic growth. The government has introduced a range of measures, including labor market reforms aimed at making it easier for businesses to hire workers, as well as infrastructure investment programs intended to create jobs and boost economic activity. However, these efforts have been hampered by a number of factors, including low investor confidence, policy uncertainty, and the ongoing global economic slowdown. The government's ability to spend its way out of the crisis is also constrained by the already high levels of debt. This delicate balancing act between fiscal prudence and the need for stimulus has left many economists and ordinary South Africans questioning whether the government is doing enough to avert a full-blown economic meltdown. The government's response has been met with mixed reactions. Some argue that more needs to be done to address the root causes of the crisis, such as the skills gap and the lack of investment in key sectors. Others contend that the government should focus on restoring fiscal discipline, even if it means short-term pain, in order to avoid a sovereign debt crisis. The path forward is fraught with difficult choices, and the stakes could not be higher for the future of South Africa. Section 6. The human cost lives on hold. Beyond the cold statistics and economic jargon, the human cost of South Africa's economic crisis is profound and deeply personal. For millions of South Africans, the crisis is not an abstract concept, but a daily reality. It is the struggle to put food on the table, to keep a roof over their heads, and to provide for their families. For young people, the crisis has meant putting their dreams on hold. Unable to find jobs, many are forced to delay their education, postpone starting families, and watch as their hopes for a better future slowly fade away. The social fabric of the nation is being stretched thin, as frustration and despair fuel social unrest and erode the hard-won gains of democracy. The economic crisis is not just about numbers, it is about people's lives. It is about the erosion of hope, the loss of opportunity, and the fear of a future where their children may be worse off than they are. Addressing this human cost is not just a moral imperative, but an economic one as well. A nation cannot prosper when a significant portion of its population is mired in poverty and despair. Section 7. A path forward towards a sustainable future. Navigating South Africa's current economic crisis will require a multifaceted and long-term approach. There are no quick fixes or easy answers. However, some potential solutions offer glimmers of hope. Firstly, addressing the skills gap is paramount. Investing in education and training programs that equip South Africans with the skills demanded by the modern economy is crucial for long-term growth and job creation. Secondly, attracting foreign investment is essential. This requires creating a stable and predictable policy environment that gives investors confidence. Tackling corruption and reducing red tape will be vital in this regard. Thirdly, fostering entrepreneurship and supporting small and medium-sized enterprises, or SMEs, is key. SMEs are the engine of job creation in many economies, and South Africa should be no different. Finally, tackling inequality and promoting inclusive growth is not just a moral imperative, but an economic necessity. Redistributing wealth through progressive taxation and social programs can help to create a more equitable society, stimulate demand, and drive economic growth that benefits all South Africans. The path forward will be challenging, requiring difficult choices and sustained effort. However, with the right policies and a collective commitment to change, South Africa can overcome this crisis and build a brighter future for all its citizens. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.